Media's Mining Weekly is interviewing Edward Stirk, the Director of Research of the World Platinum Investment Council, which today publishes its Platinum Quarterly for the second quarter of 2023 with an updated full-year forecast. Ed, it's great to chat to you again. The platinum deficit forecast for 2023 is now more than 1 million ounces. What are the factors giving rise to this large deficit?
Well, fundamentally, two things really. We've got strong 27% year-on-year growth in total demand and a very constrained supply outlook. So mine supply is expected to be broadly flat year-on-year, and so is recycling supply, also broadly flat year-on-year. So if you add that strong growth to a very constrained supply environment, and that for both mining and for recycling supply, they're both running at about 7% below long-run annual production rates, then you can see you end up with a situation where supply is inadequate to satisfy demand, and so we end up with this deficit of slightly over 1 million ounces that you mentioned.
And with this situation, demand is expected to increase quite substantially by 27% in 2023.
Well, yes, exactly. So it's being driven by a 13% increase in automotive demand year on year, in combination with a 14% increase in industrial demand, and then a strong year-on-year improvement in investment demand. So over the course of 2021 and 2022, we saw quite strong disinvestment from platinum. This year, we're expecting that to move back into pretty reasonable positive territory. And so all of those factors in aggregate ultimately result in that strong 27% year-on-year growth in demand.
So, okay, automotive and industrial has pushed us up, but what are the outlooks for automotive and industrial demand?
So for this year, I think, as I mentioned, both are expected to grow quite significantly. Automotive demand is being driven by ongoing substitution of platinum for palladium. It's also being supported by an increase in vehicle production numbers this year. So if you remember, over the last couple of years, we saw vehicle production or vehicle output being artificially suppressed by the semiconductor shortage. So effectively, the automakers simply couldn't secure enough semiconductors to manufacture the cars that they were intending to. This year, we're seeing that situation significantly ease. And then you've also got a tightening of emissions legislation, which is resulting in more PGMs being used in the exhaust treatment systems for heavy-duty vehicles and for non-road vehicles in particular. So that's a big factor for the automotive side. On the industrial side, we've got big capacity additions in the chemicals industry. Those kind of came through in the second quarter of this year. But also in the second half of the year, quite a number of new glass manufacturing facilities are expected to come online. And those two factors are really what's driving industrial demand growth. I guess we're only talking about 2023, but as things stand at the moment, it's difficult to see any real changes to those demand drivers going forward. So certainly we would be expecting to see continued strength in demand in subsequent years as well.
And investment demand has shown an uptick. Do you think this is a sustainable situation?
I think it really depends on what's happening more broadly in terms of the kind of investment world. So we've obviously had an improvement in borrowing coin demand. That's largely being driven by fewer sellbacks occurring in Japan. So in Japan, platinum investors react quite quickly to changes in the yen platinum price, and they will liquidate holdings as well as purchase new holdings when the price is attractive to them. So that's a big factor for overall borrowing coin demand this year, because it's a swing factor from disinvestment to positive investment demand. And then in terms of ETF investment demand, it really kind of depends on what is happening to the South African mining companies. So there is to a certain degree an element of, do you own the miners or more of the miners, or do you own more of the metal? And right now there seems to be this year a little bit more of a sort of favourable inclination amongst investors for the metal over the equities. But that also depends somewhat on what's happening with interest rates. So if we see interest rates going up, as they have done throughout most of this year, then of course, for a lot of investors, that is a factor which would play against holding ETFs, which are non-yielding assets. And so they're more likely to look to place their investment funds elsewhere. As things stand this year, although we've had that situation, we've still seen net inflows into the ETFs, and we're expecting those to be broadly sustained with a little bit of disinvestment, but broadly remain in positive territory through the rest of this year.
What is the likelihood of hydrogen-related platinum demand becoming a proxy for investors looking for exposure to global decarbonization, which is building up?
I think that's a really good question, and certainly one that we're expecting to become a reality in time. I mean, as things stand right now, it's worth remembering that the hydrogen demand for platinum is still very small. It's growing quickly, but off a very small base. So we're not really the market kind of need to get to a point where changes in hydrogen demand begin to be a price setting factor for platinum. And it's only at that point that that really platinum can become that proxy for exposure to the hydrogen economy and to global decarbonisation. And I think we're still a few years away from reaching that point, but it is something that we are expecting to kind of manifest in the future.
And on the supply front, we know about the load curtailment of electricity in South Africa affecting, South Africa's platinum group metals mines. But, why is the recycling of platinum declining?
So recycling has been held back by some of the factors that have also influenced just automotive production. So in terms of automotive recycling, so the recycling of spent catalytic converters from end-of-life vehicles, we've seen a shortage of end-of-life vehicles, principally as a result of the semiconductor shortage. And so that in itself has resulted in fewer new vehicles being manufactured. And so therefore consumers have been forced to run existing vehicles for longer, and that plays through into the reduced scrap availability. There's also that's been accentuated somewhat by a controversy in North America, where one of the aggregators of spent auto catalysts at the end of last year was raided by the FBI, and they've been accused of dealing in stolen catalytic converters. Now, for the recyclers in North America, they've suddenly become very worried about the provenance of the scrap that they've been recycling, and so trying to prove that provenance has resulted in quite a significant decrease in their recycling volumes whilst they work through that sort of uncertainty and try to ensure that their supply chains are completely clean. So those are the facts on the automotive side. We're also seeing fewer jewelry sellbacks, particularly in China and in Japan. So consumers in those countries, typically if they're buying new platinum jewelry, would often sell back an old piece of jewelry to fund that purchase. And those volumes are just down, and that's playing through in the lower jewelry recycling rates as well.
And finally, Ed, what, in your view, should be the biggest takeaway from the latest Platinum Quarterly Report and the updated full-year forecast?
I think the main thing is, it's the biggest deficit on record, both in ounce terms and as a percentage of demand. And it's worth thinking about, how is that deficit being met at the moment? The reality is for the platinum industry, there are above ground stocks that are excess, but those are being run down really significantly as a result of this substantial deficit. And we're expecting them to get down to about only 5 months of demand by the end of this year, which is actually sounds like quite a lot, but that's actually very low from an historical perspective. You've also added to that, over the last few years, we've seen significant excess imports into China. And so we estimate that a significant majority of those above ground stocks are now sitting within China and therefore not necessarily available to satisfy any deficits in the rest of the world. So if you run the maths on that, for the rest of the world, you get down to only about 6 weeks of above ground stocks in terms of weeks of demand at the end of this year. So certainly, we're expecting the market to begin to reflect the realities of those falling above ground stocks coming through the rest of this year and into next year.
That was Creamer Media's Mining Weekly, speaking to Edward Stirk, the Director of Research of the World Platinum Investment Council, and we were chatting on the latest Platinum Quarterly and updated full-year forecast.